Behind me, thousands of people are gathered here for this demonstration in Madrid. It's the end of a day-long nationwide strike here in this city and in nearly a dozen other cities in Spain, and as we know, across Europe. People protesting against austerity measures that are being backed by the government here in Spain and backed by Brussels and, of course, by Germany. The stage is right behind me. We have some union organizers speaking to the crowds, finishing up this rally, encouraging them to fight against the cuts. Now, what the protesters are accusing the conservative government of doing is trying to do what it's been wanting to do for years, which is slash Spain's generous welfare programs. Those include provisions with healthcare. Those include extra compensation for public sector workers. We've seen a reduction in the holidays that public sector workers receive, and they're saying this is actually an attack on that welfare state. Now, let's remember how all of this started. It started off as a banking crisis, and the demonstrators here say it should be handled as such. We saw the regional banks basically investing savings, pension schemes, investing it into property markets, investing it in ways that perhaps they shouldn't have been investing, but it wasn't really regulated by the central government here in Madrid. The European bank, which is able to provide the emergency cash that those banks needed, saying that it has to route that money through the central government in Madrid because it has no regulation over those banks. And that's been here, this tug of war over sovereignty, over European sovereignty versus Spanish sovereignty. Now, as a result, that put a dent in Spain's credit rating. Effectively, before this crisis, Spain had been operating on a good balance. Its books were relatively balanced. That means the ratio between GDP, between its debt, between its public spending it could have been better, but it was actually not an alarming number. But what happened is that loan, that potential loan, dented Spain's credit rating, and it started rising up to 7%, 7.5%, which made borrowing costs for Spain, as it tried to repay maturing loans, made those borrowing costs really expensive. People here saying this is a banking crisis and urging the government to handle it as such. Now, this has been going on. This is the second general strike in Spain in less than a year. It's been a year since the conservative government came into power here, sweeping the socialists out of the way, and people are growing more and more frustrated. One of the union organizers telling us that by his estimate, some 90% of the public is affected by these austerity measures they say aren't working. In fact, Spain's unemployment rate has risen to 25%, one of the highest in Europe. That number is a bit suspicious, as Spain has lots of people working in the black market and lots of people involved in seasonal employment. But again, one of the highest in Europe. People here say their situation is getting worse, not better, and it's likely to continue doing so, as the Spanish economy is expected to contract by 1.5% by the end of the year. For 972, I'm Roee Ruttenberg in Madrid.